But let's welcome our guest on board to understand more about the markets and the strategies that you need to keep. We have Mayuresh Joshi, Head of Equity Research at William O'Neill India with us. Warm welcome to you, Mayuresh. Good to have you with us. And do tell us, how are you looking at and sifting through all these big numbers that are coming about? Are they overall meeting the estimates that we have? Are they coming in not as feared, as disappointing that we were talking about earlier?
Morning, Sakshi. I think if you look at the IT pack, we started off with TCS and what the street was expecting and what TCS probably delivered was better than most market analysts and expectations of the street itself. HCL take decent numbers, but I think the guidance probably is something that spoiled the party for HCL Tech. Infosys recent set yesterday again. The expectations in terms of the revenue guidance, they have exceeded the revenue guidance at the higher end. I think the best case scenario was getting worked at 4.75, and they've actually come at 4.5 to 5%. So that is a positive surprise. Reliance's OTC business surprised positively. Retail businesses are holding up. So I think there are pockets where the markets are changed, at least on the larger names where numbers have probably held up. There has been a decent show. Management commentaries sound very, very optimistic, but it will be those select pockets as far as the earnings season is concerned. And therefore, I think large parts of the market might still witness earnings softness, and therefore some downgrades as far as earnings are concerned is still somewhat to be expected. Having said that, I think the consumption trends again are clearly going through a slowdown patch. How the government will address this through the budget or outside the budget is going to be extremely critical. And therefore, I think a combination of this factor is probably weighing down in terms of slower GDP estimates that the RBI and the government have both pegged in terms of their advance estimate numbers. Obviously, I think the expectations in terms of better monsoons, a better Rabi season, expectations of La Nina conditions actually evolving would probably mean that the rural economy might show a sustained recovery over the next few months and the next few quarters as well. And that is a positive that the markets might probably take. On top of that, I think what probably happens on the geopolitical part with Trump resuming office on the 20th, what kind of policy initiatives does he take, and what probably happens to core inflation on the global front. Though the print that came a couple of days back as far as the US is concerned has reignited hopes that there might be a June rate cut as far as the Fed is concerned. These data points are evolving. So I think we are going through volatile times.
Reliance now, particularly, Mayuresh, on the earnings front, we do know, like I pointed out, the stock has been lying low for the entire part of 2024, despite all the bonus, activity that took place. Finally, the earnings fueling some spirits back into the stock. Will this continue?
That's the hopes, actually. And again, I think the expectation for Reliance largely were muted for this quarter. There is hints of under ownership as well with the kind of sharp correction that we saw exhibited through our EPS and RS ratings as we see it in MarketSmith India. But again, I think the O2C business has surprised clearly in this quarter's numbers. The retail businesses, both Reliance Retail and Jio, are holding up quite nicely. And that is where I think the entire sum of parts valuation is coming through, because the retail businesses will now probably garner more than 50% of the overall EBIT contribution. And therefore, I think as these businesses mature and grow even further as we head into the next year and a half, there is also the expectation of demerger that is happening on the Jio business. So that will keep the stock under a lot of enthusiasm as far as the markets is concerned. And as far as the upstream business is concerned, because of the varied feedstock options that Reliance probably has, it always has a better showing compared to the rest of the pack. So I think the question here is retail businesses will grow, whether O2C business will continue its good performance, specifically considering how the delta spreads are playing out, are expected to play out, how the downstream product pricing is expected to play out as well, and how global demand supply dynamics, specifically the supply chain dynamics, are expected to play out as well. So again, I think the bottom line, muted set expected from Reliance, but I think they delivered much more than that. And that's why the street is taking it very, very enthusiastic.
Mayuresh, circling back to the IT pack, which you started talking about, TCS versus Infosys versus HCL Tech, or LTI mandatory if you really want to add. Those are the numbers that we have so far. Is there any pecking order that you would have post the earnings have been declared? Should investors look at that way?
So again, Sakshi, I think HCL Tech was a decent set, but I think the commentary is something that did a lot of damage in terms of price action onto the stock. Obviously, I think TCS better than expected results. Infosys had a good set yesterday as well, and therefore I think generally for the IT pack as a whole, going by the numbers which have come so far, I think the underlying trend and thread seems to be pretty clear. Revenue growth seems to be decent enough. The expectations of stability in EBIT margins with outsourcing costs largely controlled at this juncture, expectations of the H-1B visa issues going by Trump's tweets do not seem to be so much of an issue as far as outsourcing is concerned. And obviously, I think the bench strength increase exhibited by Infosys yesterday means that demand might probably just stick around. Now, it really depends on in this quarter one of US, quarter 4 in our context, on how discretionary spending budgets are probably getting firmed up. But again, I think the entire landscape towards AI, Gen AI, is probably something that will keep the Indian IT sector probably in focus at this juncture. But let's remember rather the entire perspective that the valuations are sky high. A lot of stocks we see in MarketSmith India are trading at higher basis. We have to be really selective with this space.
On the banking space, Mayuresh, Axis Bank, how do you read the numbers there? Do finally things look up? I think right at the beginning of the new year, a large part of consensus from the analysts was that they're going to be looking at financials for this year. That seems to be a safer bet because even if the markets are supposed to be volatile, this is one fact where attention could continue to sift through. How would you really look at Axis Bank vis-a-vis the larger ones, larger peers like ICICI, HDFC?
I think banking as a space should continue doing well. And again, I think the entire premise here was deposit growth are not growing at the pace at which one really desires. And that was the case a few quarters back. But I think it's coming back to normalization levels if the one goes by the trends a couple of months back. And if this continues, I think the expectations in terms of CASA deterioration that we've seen for most banks, specifically the larger ones, should start stabilizing to a large extent. And therefore, I think as a space looks good. Axis Bank, again, I think growth was a little bit on the lower side compared to estimates. The bank has clearly pointed out that there is elevated provisioning that they've probably done. And that does back and circles back to the concern whether you probably got some element of slippages coming down the line and some asset quality pressures as well. So again, I think banks as a space should continue doing well. The leadership stocks, large caps, ICICI Bank should report decent numbers. But in my opinion, I think a few of the mid-sized private banks and a few of the public sector banks should have a better show, at least as far as Q3 and Q4 is concerned.
Then anything that catches your attention in the opening now, Mayuresh?
No, I think Sakshi, one really has to take it easy because I think let's wait for the Trump swearing in and what happens because the markets is going to be extremely volatile. You're also approaching the weekend at this point of time. So no rushing into the market. You would have seen I'm a little cautious for the last 2 weeks anyways.
Yes. Okay, Mayuresh, another stock that I wanted to get, in focus is MobiKwik as well. Why? Because they have, again, got in touch to give out loans now. How would you really look at this one? Of course, we were looking at it in sync with Paytm and how competition is increasing in that space thus far. But the way it is now growing, it's profitable. Piramal Finance now has come on board to, probably extend loans and, between 50,000 to 2 lakh rupees. What would this augur for MobiKwik particularly?
I think innovations will keep on happening for the space itself, actually. So there is no two ways about it. And if they have to grow, I think they have to innovate, do partnerships. And that is what precisely they are doing at this juncture, specifically for a fintech platform stroke aggregator as well. And therefore, I think how these numbers stack up over the next few quarters, whether there is consistency in numbers, are you seeing some element of delinquencies in new business lines that you're probably looking at, are all elements to be seen only in perspective and very difficult to forecast. And therefore, I think you'll have to probably wait and watch on all these announcements that are probably happening. Might create a sentimental effect, but unless it reflects on numbers, they're very difficult to take over.
Difficult to take in focus right now. Okay, we'll keep an eye out on this one as well. Tell us, in your own assessment, what is it that Indian markets will look at, will be most vulnerable as a segment or as a partner when Trump really assumes office? What is it that is, on the back of the mind, probably coming in as a big concern for the markets?
First thing, actually, is the unpredictability of Trump himself, right? I don't know whether what he's going to announce, nor does he, I'm pretty sure. So I think he's very, very proactive, very spontaneous when it comes to all this. But when we analyze that markets with India, a large part of the tariff imposition that might actually happen, and compared it within various other countries, specifically the emerging pack, I think the tariff impositions that are probably happening or expected to happen on a reciprocal basis, if that does happen on an accelerated basis, India might be one of the least impacted economies across the globe. But again, I think from a trade perspective, I think we import lot more in terms of goods rather than exporting. I think IT services is a totally different ballgame altogether. And you've heard his tweets and comments in terms of H1B visa, qualitative assessments in terms of the data sets and the intellectual proprietaries that the IT sector probably exhibits for the sector as a whole. But outside that, if you want to look at textile, chemicals, shrimp feed, seafood, I think a large part of the tariff imposition, India is relatively better off compared to the rest of the pack. And therefore, I think we'll be the least impacted in all these scenarios as well. But I think it's interesting to see what it probably comes up with. And therefore, I think the markets are waiting with bated breath on what few days probably pose from a Trump administration perspective.
I guess time will tell, and we will have to wait 3 more days before we see that happen. And finally, we will get to see whether the markets have anything to worry about or nothing at all. Let's actually look at the other parts also, Mayuresh. Auto space is something that's going to be getting into an exciting zone. Bharat Expo is starting. A lot of new launches will be taking place. So again, a lot of excitement around the EV space, the hybrid space, the newest technology that could be coming in. What are you excited about here? Do you think, what do you make of the sector as a whole as of now as well? Do you think this will again fuel some spirits back into the sector?
Possibly, and I think the new launches are looking very, very exciting. I think look at the electric mobility launch that Mahindra is probably doing, the hybrids that Hyundai, Maruti is coming out with, and the electrical mobility platforms as well. So I think it's very, very exciting. Aerodynamic shapes, a lot of content and features within the car itself, brings us back to the point that competition will remain very, very intense as far as the auto space is concerned. Obviously, on the higher base, the next 2 quarters might be a little tough. Life might be a little bit tough as far as core numbers are concerned, specifically absolute EBITDA, margin performance, so on and so forth. You've seen some element of input cost increases which have got passed through in the Jan prices as far as few select auto companies are concerned, Maruti, M&M as an example. And because of all these factors at play, I think the next 2 quarters, I think will be defining for the sector as a whole. Obviously, when you talk about EVs as well, I think the infrastructure development is equally important. And you're seeing massive crunch of infrastructure, which is probably not there at this juncture. And therefore, I think there might be a periodicity in terms of some element of earnings softness that might get exhibited for the OEM players. For auto ancillaries, I think it's a totally different ballgame, actually, because they are catering to not just the EV makers and the platforms, but also the existing ICE vehicles. And therefore, I think a mix of both of these should ensure reasonable business as far as the original equipment manufacturing business is concerned. A large part of the will also derive from the replacement market and pricing remains in that favor. So from a personal perspective and from a perspective of how we look at it at MarketSmith India in terms of EPS rating, RS ratings, expectation of earnings stability, institution holding, I think auto ancillaries selectively might be a better play for the next year.
Mayuresh, last question to you. Tell us what is it that is most exciting you in this current realm? You did say that there's a lot of cautiousness that you are keeping in mind, but is there any space that is, garnering your favor ahead of the budget? Railways, defense, anything of that sort? Maybe sugar?
Those, I think, all these sectors actually are something which will remain in flavor, right? And as the budget draws near, there are large expectations of the market of budgetary allocation, which will happen. Large order wins, which will happen over the next few quarters. And therefore, I think the sector will remain in focus. However, I think from our standpoint, as we see it, and where we see it from a primary perspective, which is our institutional software, the sector rotation map is clearly getting skewed towards defensives at this juncture, based on what we are probably getting as data feeds, not just locally, globally as well, emerging markets as well. And therefore, I think healthcare as a space, and within healthcare specifically, hospital stocks as a space, in my opinion, should have a steady show going forward. I think this is where our belief is. There might be a consistency of earnings which might get reported, where a large part of the market, as I said in my opening remarks, might lack that. So what we look at it as EPS ratings might get strongly reflected to these hospital players. So I think within the pocket right now, I think one pocket which might have stability in earnings might be these hospital stocks.
Okay, got that. Well, thank you so much, Mayuresh, for being with us in this morning edition. Always a pleasure to listen to your wonderful insights that you shared with all our viewers. Hope you have a great time, and we're going to be meeting soon around Donald Trump swearing in and assuming office as well to see how things shape up for us back home. Thank you so much.
Thanks, actually. Always a pleasure. Thank you.